First thing we're going to talk about today is the Bitcoin 1 hour chart, and we do want to call out this area here. One thing that we mentioned was that price was rallying a bit, and what we wanted to make sure of was that we didn't get caught in the New York reversal. So the reason why we're able to call these sort of reversals out is because we understand that New York sort of does the same thing almost every day. Whichever way they're moving around 9 or 10 a.m., they'll reverse that typically sometime around the afternoon. Okay, so if price is bullish around 9 or 10 a.m., more towards the afternoon after lunchtime, they typically tend to reverse that price action. Okay, and they do this a lot. All right, now how are we able to actually track this? Because we're not watching New York every single day, right? We built a spreadsheet. Let me show you guys. This is the added value that you get if you just sort of take the extra step in analyzing price. So what you're looking at right here is just an sort of an encapsulation of everything that's been happening since the beginning of the year with Bitcoin price. We break this down in a number of different ways. We have bullish minor moves and bearish minor moves. These are moves anywhere between 0.1% and 1%. Anything under 0.1% is essentially a consolidation in our eyes. Then we get into more mid-size moves, anything over 1% to 5%. Okay. Then we get into major moves, anything over 5% in an hour. Each one of these candles are broken down in an hourly basis because we want to understand hour to hour, how does each market react? Okay. And as time goes on and we mark off each one of these moves hour to hour, okay, we start to build a heat map and we start to get a tendency of what's happening with price as price moves forward from day to day. Now, this isn't an end all be all of trading. But what it does start to point out to you is where things happen. So for example, around 2 a.m. is when London usually opens, right? They usually give some sort of bullish push around 2 a.m. And how do we know that? Just look at this number here. It's 28 compared to all of the other possible outcomes in price at that time of day. Okay. We can also look at the 12 a.m. hour, also fairly bullish. Okay. We can look at the 8 a.m. hour, also fairly bullish. We can look at the 10 a.m. hour, also fairly bullish, but this gives the example of the New York reversal and how we're able to point it out. If 8 to 10 are usually bullish, okay, look at what happens at 11, 12, 1 p.m., okay? By 2 p.m., you seem to get another reversal of whatever's happened between sort of the after lunch hours, okay? So just building this type of knowledge in your brain gives you an idea of how price may react during certain parts of the day, okay? Now, one thing that we have been using this for is to get a gauge of where price may actually go, because usually what happens is price will play the opposite end of the tendency. Okay. And I think this is all based off algorithms. But if you're able to track it like this, you can start to pick out how the algorithms are reacting. If price is mostly bullish and it's been that way for 2 or 3 weeks, chances are during that hour is going to turn bearish. It's the way that these algorithms seem to work to keep everyone off guard and not be able to build any real anticipatory, measures on how to judge price from hour to hour. We are attempting to tackle this. So as we continue to build this heat map over time, we're going to do this for a year, 2 years, 3 years. Over time, we're going to get a real gauge on what happens in price during certain quarters, during certain times of day, during certain hours, during certain sessions from New York to Asia to London. We will be able to pinpoint and pick out what the most probable move is on the day based on tendency. All right. So that's how we were able to call out the New York reversal. It's been doing it all year. How many people are actually able to see this and point it out? Well, you found one. Welcome to the long and short. All right. So let's dive into price. Okay. And let's talk about this New York reversal and how this actually came in. Okay. And actually, let's show the clip where we called this out so that people are aware of what we were pointing out. Okay, so we're going to take a look at the Bitcoin 1 hour chart, and there's a few things that we want to point out here. A lot of imbalance left to the top side. So can price push up and take out these imbalances? Yes, it can. But in all reality, if price is sort of in a negative zone and you have a bearish bias and you have a bearish trend developing, then the only move up will be sort of a retracement to take out that imbalance and then continue lower. You can see that same exact price action here. Okay, so you have imbalance here, imbalance here. Price comes up, fills that imbalance, and then just sort of topples over. All right, so you have imbalances here. Do not, under any circumstances, get hyped up over any rallies into this zone. Okay, these essentially will be retracements right back down. Even if we draw a Fibonacci on this, we can probably see some correlations in this. So let's go from the top to the bottom because we're going short there. Right, so as you can see, your golden zones are aligning right there. Okay, so let's just kind of blow this up a bit to see. So as you can see, right, if price were to come back up here, it falls right into sort of the golden zones of retracement for the Fibonacci to refill these imbalances. So if you're going short, these are the areas where you're looking. You have confluence here. Okay, this is where price dipped under, boom, came back above. This is your area to go short. Okay, if you're thinking short. Okay, so you're able to see here, right? Price did create these imbalances, stalled. This is where we started to talk about the New York reversal. Okay, price came up, fulfilled these imbalances very quickly within an hour, and then reversed. Right at the time that we were saying the New York reversal typically takes place, 11, 12, 1 p.m. By 1 p.m., that's when the real move kicked in. Okay, and then they finished you off at 4 p.m. Same type of stuff happens in New York all the time. Okay, so it doesn't matter if it's bullish or bearish. These are the typical patterns that you'll be able to try to pull out of the New York session from the open to the close to be able to get a gauge on where you may be able to take some opportunities. All right, but also price did sort of create this low here, sort of set the table, crash through, grab liquidity to take it to the top side, and now it's really just sort of swinging in this range from this previous area of imbalance. Okay, so price is doing the normal thing. It's ranging, it's falling, it's ranging, it's rising, it's falling, it's ranging. Same range that we were talking about pretty much since January, right? And we had an idea that price may start to range out going into the FOMC, right, which is the Fed meeting in March. And the reason why we had this feeling is because there's a lot of uncertainty in the market. There's nothing really pushing this super bullish, and there's nothing really telling us that we all should sell. All right, so the market, when you have this equilibrium per se, you will swing within these ranges. There'll be good days, there'll be bad days, and today we seem to be having a pretty good day on the crypto market.